This is probably the biggest scam in SMC, and I'm going to show you why. And by the end of this video, I'm also going to show you how you can avoid this scam in SMC. So let's take a look at this model we have on our screen here. From what we can see here is the market has been creating higher highs, higher lows, higher highs, higher lows. From what we have been taught and from what most of us have seen from YouTube videos out there, what they normally teach us is if the market breaks above an old high, like this is the case here, right? This was our old high here. When the market broke above this old high, for a bullish example, we are supposed to mark this as a break of structure, and we just basically continue this. But why is this actually not working? Because if this was how structure was meant to be mapped, many people will be profitable in the forex market. Looking at this, right, we see that when the market breaks above this zone, we have some sort of a point of interest here that we are looking to buy from, and we also have some sort of point of interest here that we will also be looking to buy from in this case. Now, is this really how the market works? Because if you see from here, right, when the market is moving this way and you're marking this as your break of structure, you can also see that those people that trade trend lines, they're also mapping this out. They're also drawing their trend line here, and they're also looking to buy where you're looking to buy. But this is not how you should mark your structure. If this is how you mark your structure, somewhere along the line, you run into a problem like this, right? You run into a similar problem whereby if this is how you mark your structure, somewhere along the line, you are going to run into some sort of problem like this, where the market breaks below our current low, right? Our current low, which is supposed to be a protected low. And then when the market is coming back up, we are looking maybe to sell from here. But what you discover is the market just continues up and going up. Now you'll be left with a change of characters here and another change of characters here. That is because you don't map your structure correctly. So how should we map your structure if this is not the real way to map your structure? Now let me show you. Let's keep all of this aside. Let's say we have a market that is going up, right? Let's take the same scenario. We have the market that is going up, right? What do you wait for? Now you first need to wait for the market to create a pullback, no matter how small the pullback is. What matters is the pullback should be a valid pullback, right? Once the market creates a pullback, what you wait for is for the market to take out that pullback. Then the market takes out the pullback now and breaks above structure. This is where now you can map out your valid break of structure. For a break of structure to occur, the market will need to take out the pullback. It should be the last pullback, right? You don't need to wait for the market to take out any pullback. This pullback like this should be the last pullback to the upside. If you look from this leg, right, you start looking for the pullback. If there was a pullback here, then we'll mark that pullback. Now, what is this pullback called in SMC? This pullback is called an inducement. SMC is a liquidity based strategy, and we all know that inducement is a type of liquidity. So now, once this market has taken out this inducement here and breaks above structure, we have a valid break of structure. Stop mapping this as your break of structure, or else majority of the time you'll be stuck with a change of character here and a change of character here. That is not how you are supposed to map your structure. If this was how structure was meant to be mapped, right? If this is how structure is meant to be mapped like that, like this, every SMC trader will be profitable. Because if you map this, you go into the market, even you yourself, when you look at the market, this is not how the market moves. If you map this, you'll be stuck with change of characters multiple times with an internal moves. This is how you are supposed to map your structure. You wait for the market to take out an inducement, then before it gives you a break of structure. This is a valid break of structure. This here is not a break of structure. This is not a break of structure. Stop doing this, because you end up buying from here. You buy from here, the market passes, you say, oh, change of characters. You sell from here, the market comes and passes, you say, oh, SMC is a scam. SMC is not a scam. You are the scam. You don't know how to trade it correctly, the way it was designed to be traded. Now, after the market has given us a break of structure here, right? If you look here, you see that we have another pullback. Now, we don't mark this as our break of structure here. That is not a break of structure in this case. What you need to wait for is for the market to take out the low, right? This low might be a sweep, so long as the market has taken out the low. When the market sweeps this low and breaks above, you can map that as a valid break of structure. If the market breaks the low and pushes down, right, you can still map this as a break of structure. You can map this here as a break of structure here, like this, right? This is our break of structure for one particular reason. It took out this inducement under this low. This is the low here. Once the market takes out inducement, if you are an upward trend and if the market breaks structure and takes out inducement, you can start looking to buy from any point of interest along this leg. Now, right, looking at this, if you see that, if maybe you are buying, this is your point of interest here, this is where you should be buying. Now, this also comes with other tricks, right? Let's say the market gives you a break of structure. Sorry, this is a mislabelment. Let's say the market gives us a break of structure like this in this case, and is pushing down without creating inducement. What do you expect? Now, if the market start pushing down without creating inducement, you know that this low now is supposed to be taken out. This low will be taken out, and that will not be a change of characters. That will just be a continuation. This low will act as inducement for the market to continue up. So you might have something like this. The market just comes and sweeps the low and continues up. Now, in this case, now we can transfer this break of structure from here to here. And this now becomes our break of structure. So basically, without inducement, you are not supposed to buy, because if you are buying without inducement, you are already being induced into the market. You will be induced into the market. And when you are induced, your stop loss is being taken. That is a type of liquidity. You have been fooled to get into a market where you are not supposed to get into, whereby you created the liquidity. Now, looking at this, right, this will not be a break up, this will not be a change of characters here. Why? After this break of structure occurred here, you see that this leg had no pullback. This leg had no pullback and there was no inducement. So we waited for the market. In this case, you are not supposed to be waiting to buy somewhere around here, because like I said, there's no reason for you to don't buy if you don't have inducement. If the inducement is not taken out, there's no reason for you to buy. If you buy, you end up being inducement. You end up being the inducement, and you will have fallen for an SMT, which is a short form for a smart money trap. Now, looking at this, right, if the market continues up, if the market happens to continue up and gives us another pullback, if the market gives us another pullback and then pushes down, you can look to buy. If you have maybe a point of interest here before this one down here, the first point of interest under your inducement is called your decisional point of interest, and you will have a lower probability of working out. It has maybe a 50-50 probability of working out. This point of interest here, it's a higher probability because it's your extreme POI, and it's expected to hold because this will be a strong low here, right? Same as here, this is your strong low, because the market is going up. If the market breaks this low here, this is where you have your change of characters. This is where you should have your change of characters. Here, the market broke this low and we never had a change of character because there was no inducement on this leg. So this low now acted as our inducement. So if the market also breaks this low here, now we have a change of characters. So this is where you're supposed to be looking to buy with high probability and with confirmation entry. So guys, let's go into the charts without wasting any of your time. Let's go into the charts. I will first by showing you how if you map your structure the way I first showed you, which is this one here, you will fall into a trap. You will fall into many traps, right? Now, let's take for example, we have this here on go here, right? Let's say if you map this as your break of structure here, if you happen to map this as your break of structure, then you come here again, you map this as your break of structure. Sorry about that. If you map this as your break of structure, right, and you are looking to buy here, you are looking to buy from here, what normally tends to happen is from here now, you see that the market came, it reacted to this zone. And this is where many people were buying. Many XMC traders have been trapped in this zone because they map this as a break of structure, they map this as a break of structure. Now, when these many traders were trapped here, the market broke below, and this is what they will be marking now as a change of characters. This is what they will be marking as a change of characters in this case. And if you map this as a change of characters, what should you do? Now you see that their biases normally change in this market, and they will start looking now for sales. If you look here now, you see this good order block. You see this order block here, right? You see this order block here. When price got to this order block, you can see from here, right? This is a push up and this is a pullback. Then the high was taken. So this is just a good entry criteria. When price reach this type of zone, it also gives you a good entry criteria, and you think that, oh, I'm in for a win. Now, if you look here, right, after price gave us this entry criteria, people should have been selling from here. This is where the people who have been studying this would have been selling from this zone here. Now, when you sell from this zone, price makes as if it wants to go down, and you add more positions, price comes up and takes you out. For those that were patient in this case, they would have sold from maybe somewhere around here. You see what price did? Price came here, made as if it gave a liquidity sweep entry and continued up. That is because they don't mark structure the right way. Now, let me show you an example where if you have marked structure the right way, which I have just shown you, you should not have fallen into this scam. So before we continue, please, if you are new to this channel, I'm called FX King. Please subscribe to this channel. Subscribe, leave a comment on what you think I should do next, or which video idea you think I should present here next. So let's go to the next idea, right? Let's go to how you should really map your structure on the real chart. Okay, this is my real chart here, and these are my real markings, right? Now, starting from this is where the price started reversing. What you can see from here is the market created this zone. I should have marked this as my break of structure if I was following the scam method, which many see on YouTube here. But now I knew better, and this is my first pullback. This pullback acts as my inducement. Once this pullback is taken out, the first pullback is taken out, as we earlier saw in the diagram, then I can start looking to continue up. So now, so that this is my inducement here, it got taken out, and I started looking for this my buy. This is the buy position that you see here, and I targeted this high. Now, after that, I still need to wait for inducement to be created, because I'm still anticipating the next break of structure to the upside. Now, here, this is our inducement. This is our first pullback here, right? After this high has been broken, the last pullback to the upside, which is this one. This is it. Once it was taken out, I started looking for a POI to buy from, and you see, this is my POI that I bought from here, and price rallied and took out this high here. Now, after price took out this high, now price started retracing. And if you look here very well, you see that we don't have any pullback. When price started retracing, I consider this as my inducement, right? This zone is my zone of inducement. Now, when price took out this inducement, I did not map this as a change of characters. This is where my change of characters actually occurred. After this change of characters occur, right, what am I waiting for? What was I waiting for here? I simply waited for this leg that gave me a change of characters for an inducement, a pullback, just as simple as that. Once the pullback is taken out, which is this zone here, I started looking to my for my sell. Now, if you can see, sorry about that. Now, if you can see from here, once this pullback got taken out, I started looking for my sell. And where was my point of interest, right? My point of interest was this extreme POI. Once the market tapped into this point of interest, I finally got the confirmation and I sold. I sold. The market pushed down, finally giving me a new break of structure. Like you can see here, this break of structure is valid with using the same terms that we told you, right? It took out inducement. If you see that, if I was mapping anything as a break of structure, this will probably be mapped as a break of structure here. I'll be looking to sell from here. Instead of mapping it out as an inducement, I'll be looking to sell from this other block here and I'll get liquidated. I'll get liquidated. That's just the fact. So now, once the market took out this break of this inducement, it pushed up, tapped into this our extreme POI, then so giving us a new break of structure. Now, what are we waiting for, right? We are still waiting for inducement to be taken out. We're waiting for the inducement to be taken out. If you look here, you see that this is our inducement here, right? This is a pullback here. This is how the market pushed down, retraced, then gave us a valid pullback here. Once this pullback was taken out, our next point of interest, which was our decisional point of interest in this case, was this point of interest. When the market finally tapped into this point of interest over here, it gave us a confirmation entry and we took another sell targeting this low, because we knew that this low was our weak low, right? And we anticipated price to break through weak lows and respect strong highs. So now when price finally broke through this low, what were we waiting for, right? We waited for the same scenario. We waited for the same scenario here. We wait for price to take out our inducement, right? Our inducement, and then we can look to sell at maybe the extreme or the decisional POI. Now, in this case, this is my inducement here, right? Though this is technically my last pullback here. The reason why I did not mark this is because it doesn't appear on a bigger time frame. So I mapped this one, and when the market finally took out this inducement here with this move, it tapped into our extreme POI, which I got this sell. This sell was actually upgraded to my Telegram group, and many people got into this sell, making a lot of money. Now, when the market pushed down, right? When the market started pushing down, the market came into this point of interest. Now, this point of interest on a bigger time frame, this is a mitigation on a bigger time frame, right? So once the market tapped into this, I started looking for maybe my buy positions, because now I knew that the market had gotten to my bigger time frame POI, and it's time that I started changing my bias of the market. So this was the first zone after a sweep, and yeah, I did not get into this trade. I actually missed it, but that is from where the market originated and started pushing up. So guys, if this is your first time on this channel, don't forget to like my videos. It encourages me to make more videos, and yeah, make sure that you subscribe to my channel. Let the channel grow so that we can bring you more interesting videos and more educational videos like this. Now, looking at the lessons of today, I'm sure that you must have learned one or two things, right, that will actually help you in a real market to overcome the SMC scam that you have been seeing everywhere on YouTube. You should avoid that. Avoid marking the market that way so that you can be profitable. You can be profitable. If you practice this, you see that you become better in your trading and you see great improvement. So guys, if you found value in this content of today, please like, subscribe, follow me for more, and you can check out the link to my Telegram group. Is in the I will leave it in the description. Also, I will be leaving a link to my broker. If you want to register with my broker, the link will be in the description. So have a nice day. Don't forget to subscribe.